Hello friends, my name is Swami. Welcomes you all to my BReach YouTube channel. The intention behind creating this channel and recording videos is purely an education purpose and help people to know that achieving financial freedom is possible to anyone in long term. In this video, let us analyze one strategy index, that is Nifty 50 Value 20 Index. Strategy indices is a kind of investment strategies, meaning they are based on mathematical formulas and leave little or no room for discretion by a fund manager. They are thus the opposite of active strategies which depend on human judgment like fund managers. There are nearly 7,400 stocks are listed in Indian stock market, out of which top 50 stocks are selected and constitute Nifty 50, which is called as a benchmark index of Indian stock market. The Nifty 50 covers major sectors of Indian economy and offers investment managers exposure to the Indian market in one efficient portfolio. The index has been trading since April 1996 and is well suited for benchmarking for index funds. The Nifty 50 is owned and managed by NSE Indices Limited, formerly known as India Index Services and Products Limited (IISL). It is India's first specialized company focused on an index as a core product. Now let us analyze strategy index, that is Nifty 50 Value 20 Index. This index follows the strategic investment approach and in which 20 stocks are selected within the Nifty 50 to form the Nifty 50 Value 20 Index. It is designed to reflect the behavior and performance of a diversified portfolio of 20 stocks. These 20 stocks are selected on the basis of return on capital employed (ROCE), price to earning (PE), price to book value (PB), and the dividend yield (DY). Now, what are the characteristics of this index? This index consists of 20 stocks. It is launched in the year of 2014. The base date for the calculation is 2009, and the index is rebalancing once in a year. Now, what are the sector representation in this index? There are 8 sectors are there. The number one is information technology, which having a 40% weightage, fast moving consumer goods having a 24% of weightage, construction is having 10%, power is having 7%, oil, gas and consumer fuels having 6%, metal and mining is have 5.5% of weightage, automobile and auto components having 4% weightage, construction materials having 2%, and lastly chemicals having 2% weightage. What is the meaning of weightage? For example, I am saying that chemicals is having a 2% weightage means if you invest 100 rupees in a particular index, out of 100 rupees, 2 rupees will be invested in chemical companies. So let us see what are the companies, what are the stocks which we are telling that. For example, we are telling that 40% is information technology means how many companies are there? There are 5 companies are there in the information technology like HCL Technologies, Infosys, Tata Consultancy Services, Tech Mahindra and Wipro. In FMCG means fast consumer goods, there are 20% is weightage is there, means the Britannia Industries, Hindustan Unilever, ITC Limited, like that. In the constructions, there are 12% weightage is there, means if you invest 100 rupees in this particular index, 12 rupees will be invested in the construction stocks, means the Grasim Industries and Larsen Turbo Limited. Again, in the automobile and auto components, the 4% investment is there, that is called as Bajaj Auto Limited and Hero Motocorp. In the same way, if you go for power sector, there are 7% invested in power sector, means NTPC Limited and Power Grid Corporation Limited. 6% in oil and gas and consumer fuels, means that Bharat Petroleum Corporation Limited, Coal India Limited, Oil and Natural Gas Limited. In the metal and mining, there are 2 stocks are there with 5% of investment is there, that is Hindalco Industries Limited and JSW Steel. Now let us see what is the returns it is given from the 2014. Okay, from last year it has given around 12% as a return CAGR. In 5 years it is given 18% CAGR, and since inception means 2014 it is given above 19.5%. While we are discussing with that indexes like Sensex and Nifty, they are giving 12%. Here the strategic index is giving generating alpha means 2 to 3% depending upon the index, that strategic fund which you are going to select. In the same way, this index is looked after by a professional team managers. There are a 3-tier governance structure of 3 different bodies like the Board of Directors of NSE Indices Limited, the Index Advisory Committee Equity, and the Index Maintenance Subcommittee. These are the 3 different bodies are look after this particular index. All strategies are very dependent on market conditions, and investors need to be experienced enough to decide on the strategy that suits their risk profile and look carefully at the criteria that is followed in the construction of the index. That's all in this video. I'm Swami signing off, and see you in the next video. I want you to become rich. Like the video, share to your friends, give valuable feedback, subscribe to my channel, and don't forget to click on the bell button so that you won't miss a notification of the upcoming videos. Bye bye. Take care. Jai Hind.